Good morning everybody, this is Lara from Pure Elliott Wave with your daily update for Bitcoin, Ethereum and XRP, and happy Friday everyone. Hope you're all looking forward to a fantastic weekend. Before I get into it, if you're not already subscribed here, I recommend you do so that you don't lose my channel and you can find me again, because I'm updating these markets Monday to Friday. I've been doing this for 15 years. I'm a chartered market technician for over a decade, so you're getting my experience and my qualifications on these three markets 5 times a week for free, which is a pretty good deal, I think. Getting into Bitcoin, what I want to look at on the weekly chart is I want to focus our attention on this current weekly candlestick. This candlestick is so far closing lower within the week. It's an inside week, but if this candlestick can close halfway into the body of the previous weekly candlestick, then this would complete a dark cloud cover, and that's a bearish reversal pattern, and it's coming in the context of a very obvious upward trend. So the halfway point is 41608.695. And so if the close is at or below that point, it will complete a bearish reversal pattern. Now, dark cloud cover is not the strongest bearish candlestick pattern, but it is a bearish reversal pattern. It will be telling us one of two things. It could be telling us that there's going to be a full 180-degree reversal and a new downward trend. It doesn't tell us how long that trend will last or how deep that trend will go. That's the first thing it could be telling us, a 180-degree reversal. It could also be telling us a shift from up to sideways, and again, it doesn't tell us how long the following sideways movement may last, because remember, there's 3 directions for price: up, down and sideways. So if we see a dark cloud cover, we put it into context with everything else to try and tell us which of those 2 scenarios, a full 180-degree reversal or a bit of sideways movement, is most likely. So let's put that into context. The context is ADX tells us there is definitely an upward trend, and it's a very, very long way to go before it's extreme. RSI is fairly deeply overbought, but only recently and not as deeply as it can get, and there's no bearish divergence. So the trend is not extreme, conditions are overbought, but they do usually get overbought pretty early on in a bullish run for Bitcoin. So the conditions are not so extreme as to expect a full 180-degree reversal. If we see a dark cloud cover close at the end of Friday's session, then I would expect it's possibly more likely just a little bit of sideways movement or a brief, shallow little pullback. That would be my judgment on that. At the daily chart level, today Bitcoin's having a little inside day so far. So far it's red. Looking for support, still has been holding this week at 41,100. At this time frame, I'm expecting a shallow little pullback, and if price gets back down to 38,500, I expect it's really likely to hold there. This was an area that was recently tested multiple times for resistance, and then price broke through, moved up and away, could be coming down for a back test of support before the upward trend resumes. Today's session so far has very weak volume, although it is still the morning, but it's kind of close to midday. Can't really draw a conclusion on the volume here, but so far it's a bit weak. At this time frame, ADX is now back below extreme readings, back into more neutral territory, so setting itself up again for a new signal. RSI is back into neutral after exhibiting triple bearish divergence when it reached deeply overbought, and ADX is back into neutral territory after just reaching overbought and exhibiting also triple bearish divergence. I still have the same 2 wave counts for Ethereum, and for Ethereum I want to draw your attention to this trend channel. This is my main Elliott Wave count, and we need to have this trend line breached by a full red daily candlestick below and not touching this channel to meet my very conservative definition of a channel breach. If we have that, I will have further confidence in this Elliott Wave count for Ethereum. It expects a first wave at minute degree is over from this low to this high, a complete 5-wave impulse, a second wave correction underway to find support either at the log function of the 0.382 Fibonacci ratio at 2018.35 or the log function of the 0.618 ratio at 1812.01. If it's deeper or more time consuming, then it may be expected to find final support at the lower edge of this channel, which I've copied over from the weekly chart. Alternatively, 1 and 2 could have been over here, but I don't like the look of this second wave. We could have another 1 too, but while price remains in this channel, this wave count remains valid and viable and has a not as good a look, but it's okay. The thing I don't like about minute 2 is it's just shallow and sideways. Second wave corrections are really shallow and sideways for these markets, although at this point in a big third wave at minor, intermediate, primary and cycle degree. That's my bigger picture wave count. At this point, it's possible the second wave could be relatively shallow, pulled up by the upward force exerted by that big, strong third wave at multiple large degrees. Here, minute 2 is a double combination. The first structure in the double, labelled minuet W, is a zigzag. The double is joined by a 3 in the opposite direction, labelled X, and the second structure in the double is a running contracting triangle labelled minuet Y. Now, you cannot have a triangle as the sole corrective structure in a second wave position, but it can be as part of a combination, and when a triangle is part of a combination, it's always the terminal structure in the combination, so either Y or, if there's a third structure, Z, which is pretty rare. It's also pretty rare in my experience and the research I've done on these markets to find a triangle in a combination. Now, almost always a zigzag and a flat, so that reduces the probability further of this wave count. What I like to do with Elliott Wave, and this is the correct way to do Elliott Wave, you should always consider alternates. I always do. I may not chart them out fully. I can see them really quickly by glancing at a chart because I've been doing this for it's over 15 years now. But you should always consider alternates, and then what you do is you rank your wave counts in order of probability. The most likely wave count has the most common structures, the best proportion, which gives the right look, and the most common behaviours for that market. And then when you get less common structures or less common behaviours for that market or poor proportion, you rank those wave counts with a lower probability. And then you go with the highest probability. And then what you do, if you've got the skills, is you use classic technical analysis to add to your Elliott Wave. Does the Elliott Wave direction expected, is that supported by classic analysis or not? And then you come to your conclusion. So that's what I'm doing here. Anyway, so this alternate wave count I judge to have a lower probability. If we see this trend line breached with a full red daily candlestick below and not touching it, I'll probably discard it prior to invalidation. The invalidation points I determine using Elliott Wave rules. Minuet 2 may not move beyond the start of 1 below 2019.91. And the reason why you can do those rules to use invalidation points is the Elliott Wave rules, all bar 1, are absolute. A new low by a fraction of a cent on a tick chart is enough to invalidate the wave count. There's no wiggle room, which is a really nice thing about Elliott Wave. If anyone can tell me in the comments below what's the one Elliott Wave rule that allows a little bit of wiggle room, then I would reckon that you really, really know your Elliott Wave rules. So let me know if you know which one that is. I'm just really curious how many people out there know which one. At the daily time frame, quick technical analysis for Ethereum. So far, this candlestick is fully engulfing the previous green candlestick, so we've got an increase in range. Price is falling, but it's falling of its own weight so far today because volume's not pushing it lower, although again, just before midday Eastern Standard Time, so still quite a few hours to go. So far this week, support has been holding at 2,100, and this could actually continue to hold. My main Elliott Wave count may be wrong, and the alternate may be correct if support here holds. This was really strong support, tested multiple times, price broke through, moved up and away to next resistance at 2,400, back test of support here at 2,100, and now it's moving between resistance and support in these areas, consolidating, moving sideways for the last couple of weeks or so. Today, so far, volume is very light, price is falling of its own weight. ADX is declining for Ethereum, there's no clear trend. The previous upward trend for ADX reached very extreme. RSI reached overbought and now exhibits double bearish divergence. Money flow exhibits no divergence, it did not reach overbought. With no clear trend as indicated by ADX, reverting to a model of stochastics plus support and resistance. Stochastics reached overbought, price reached resistance, stochastics moved just below the halfway mark, price reached support and bounced up, stochastics deeply overbought, and now in neutral, moving a little bit lower, although today it's actually moving higher, but overall lower. Let's expect stochastics to continue lower and price to continue lower to support. Stochastics may not reach oversold, it may only reach about the halfway mark, and if price gets support about the same time, then the downward swing may be over. For XRP, my Elliott Wave count is much more bullish, and my overall analysis is more bullish than the other two. From this low to this high, I have a minor degree first wave impulse. From here to here, I have a minor wave 2 expanded flat. When 2 ends, 3 begins. My XRP Elliott Wave count has a third wave at minor, intermediate, primary and cycle degree. It's possible that the strong upward pull of a huge third wave at multiple degrees forced minor wave 2 to be more shallow than second wave corrections commonly are for these markets, falling short of support at these trend lines. This wave count expects upward movement next week, and once we move beyond the end of minor wave 1, minor wave 3 should start to really show an increase in momentum. Minuet 2 may not move beyond the start of 1 below 0.5892. Alternatively, if minor 1 was over here, then minor 2 could be an incomplete zigzag, may find support at the log function of the 0.618 ratio at 0.5388, which is probably a bit too low because there's very strong technical support in the 54 to 55 cent range, so maybe it'll end there, not be quite this low. If we see a new low below 0.5892, that first main Elliott Wave count will be fully invalidated. Again, a fraction of a cent on a tick chart is enough to do that immediately, and then we switch to this model and we expect more downward movement to support. The daily time frame, I'm going to still label support at 62 cents until the close of Friday's session. Price has been moving around this and it's not perfectly showing support and resistance anymore, so if price closes below this, I'm probably going to relabel it resistance or maybe just adjust that, and it might just need to be adjusted a little bit higher, but we'll leave it at 62 cents for now. If we close below 62 cents, then I will expect really strong support at 58 cents, but stronger than that below. The 54 to 55 cent mark for XRP is really strong. It's been consolidating for weeks now, essentially just moving sideways. And overall, during that consolidation, volume is declining. On balance, volume's been giving us bullish signals though, so that suggests an upward breakout, and this supports the main Elliott Wave count. ADX is declining. It's now today really excitingly below both DX lines. That's wonderful to see, because the strongest signal ADX can give is when it rises up from below both of the DX lines, and it comes from below those from a low level, and it starts to turn up and have a positive slope. Whichever DX line is above the other gives us the direction of the trend, and a rising ADX at or above 15 tells us there is a trend. If ADX can get below 15 and then turn around and curve up, it'll have that set up, giving us the strongest signal ADX can give. And if the positive DX line is above the negative at that point, it'll be telling us there's a very, very new upward trend. Let's see. I'm really excited to see it's come all the way down and now is below both DX lines today. With no clear trend, reverting to a model of stochastics plus support and resistance, we'll expect price to continue lower to support and stochastics to continue lower to reach oversold simultaneously with price at support, and then that may be the end of the downward swing and the start of an upward swing, and that model would tend to look at the alternate Elliott Wave count as a little bit more likely. That's it from me today with your quick update, and I hope everybody is looking forward to a most fabulous weekend.